All right, welcome to today's Explainer. We're jumping right into the Q2 2026 earnings release from Samsung Biologics. And let me tell you, if you want to understand where the global biotech supply chain is heading right now, this quarter is an absolutely fascinating case study. We're going to look at how a massive industry player is aggressively expanding both its footprint and its revenue base.
To map this out, we've broken it down into 4 quick chapters. First, the Q2 financial leap. Second, driving the revenue engine. Third, strategic global expansion. And finally, committing to the future. Okay, let's dive right into this. Before we even get to the financial data, we really need to ground ourselves in the sheer physical reality of Samsung Biologics. We're talking about absolutely massive, state-of-the-art biomanufacturing hubs. The premium scale of these facilities is the literal foundation for all the corporate numbers we're about to review. This infrastructure is what pumps out life-saving therapeutics for the entire global market. And as you'll see in a second, they are pushing this capacity to its absolute theoretical limits. Chapter 1, the Q2 financial leap. Let's take a look at those Q2 2026 numbers.
30%. Right? In the world of heavy capital-intensive manufacturing, a 30% year-over-year jump in quarterly revenue is just, well, it's a massive leap. We aren't talking about some nimble little tech startup finding its first few customers. No, we are talking about a multi-billion-dollar industrial giant expanding its top line by nearly a third in just 12 months. Now, let's break that jump down a bit. Revenue climbed from 1,014 billion Korean won back in Q2 of 2025 up to 1,321 billion in Q2 2026. But the real test of any well-run manufacturer is whether they can actually translate that top-line growth to the bottom line without costs just spiraling totally out of control. And they absolutely did. Operating profit jumped 23% to hit 586 billion won. So they aren't just scaling up, they're doing it profitably. Chapter 2, Driving the Revenue Engine. Let's examine the operational catalysts actually making this happen. The direct cause and effect here is beautifully simple on paper, but incredibly hard to execute in the real world. That huge revenue spike, it was physically driven by one main factor: 100% capacity utilization across their first 4 manufacturing plants. Every single bioreactor, every clean room running at full tilt. Now, they did have a little help from some favorable foreign exchange tailwinds, which gave them a nice extra bump, but at its core, this was really just about maximizing the physical assets they've already built. And the thing is, they aren't just coasting on today's orders. Look at this. Their pipeline sits at a staggering $21.7 billion in cumulative CMO contract volume. That is future revenue, already locked in. What that tells us is that global pharma companies aren't just bringing Samsung Biologics on for quick, one-off projects. They are committing massive, long-term capital to secure capacity in these facilities for years to come. If we look at the specific balance of those projects, they have 115 CMO projects driving commercial manufacturing today, and that's supported by 176 CDO projects. These CDO, or contract development projects, are basically the seed corn for the future. They're helping clients develop drugs today with the highly strategic goal of transitioning them straight into that CMO manufacturing pipeline the second those drugs get approved. It's really a brilliant self-feeding ecosystem. So, how do they push beyond their current capacity? Well, Plant 5 is already in its PPQ ramp-up stage. They've already completed successful engineering batches, so this massive new facility is entering its qualification stage to significantly boost second-half revenue for 2026. They literally maxed out their current capacity, so they're just turning on the next factory. Chapter 3, Strategic Global Expansion. Let's see how this builds into their international strategy. Their recent acquisition of a Swiss-based global peptide CDMO is a perfect example of their incredible speed of execution. I mean, they signed the agreement on July 18th, moved straight into regulatory approvals through August and September, executed the tender offer, and they are targeting a complete closure by December. Going from the first signature to total completion in just 5 months, that is remarkably efficient for a multi-billion-dollar international merger. So the crucial point here is understanding what exactly they just bought for an equity value of 1.5 billion Swiss francs. They didn't just buy a company, right? They bought an immediate, sprawling global footprint. This Swiss CDMO comes with 6 separate cGMP manufacturing sites spread across 5 different countries. On top of that, it brings deeply entrenched expertise with a track record of over 1,000 peptide projects. Peptides are an absolutely massive growth area in therapeutics right now, and Samsung Biologics just acquired immediate top-tier global capability. But their international strategy isn't just about buying new assets.
It relies on stabilizing their existing global ones, too. Their Rockville facility in the United States has maintained stable operations, successfully navigating around some previous disruptions just by cleverly rescheduling production. And most importantly for the financials, this U.S. facility is set to begin recognizing revenue in Q3 upon the quality release of its Q2 production batches. Basically, Rockville is shifting from a strategic piece on the board into an active revenue generator. And to feed all this expanding international footprint, they are pushing their commercial front lines right into the heart of the European biopharma market. By Q3 of 2026, they are opening a brand new sales office in the Netherlands. They are making absolutely sure that their new Swiss plants, along with those massive Korean hubs, stay at full utilization with a dedicated regional sales force. Finally, Chapter 4, Committing to the Future. Let's talk about ESG and risk mitigation. Alongside this earnings release, the company highlighted the publication of their 2026 ESG report. Now, this isn't just an afterthought. This document is highly strategic. It's designed for their external stakeholders. We're talking pharmaceutical clients and big institutional investors. It summarizes exactly how they are managing the complex, real-world risks associated with global manufacturing. The achievements in that report actually provide some tangible metrics for the whole sector. First off, they've been selected for the Dow Jones Best-in-Class World Index for 5 consecutive years, which proves this isn't a fluke, it's a sustained operational culture. Environmentally, they've locked in an RE80 target in accordance with the Science-Based Targets Initiative. But perhaps the coolest part, they signed MOUs to provide Scope 3 emissions consulting for 10 of their domestic manufacturing partners. So they aren't just cleaning up their own house, they're actively using their expertise to help clean up the carbon footprint of their entire broader supply chain ecosystem. Which brings us to the ultimate question for you to consider today as we wrap up this explainer. Just look at the full picture we've painted here. You've got 30% revenue jumps, a $21.7 billion locked-in pipeline, lightning-fast European acquisitions, and massive new plants coming online. So, how will Samsung Biologics' aggressive M&A and manufacturing ramp-up reshape the global biotech supply chain? I mean, when one single company gathers this much momentum, capacity, and global reach, it forces the entire industry to adapt. Definitely keep your eyes on how this powerhouse executes the rest of 2026. Thanks so much for tuning in to today's explainer, and keep